It just happened. It happened after 17 years. What's up, guys? I'm Ahmed, and today we're gonna explore the Japanese economy and the recent hikes in the interest rates. We are going to cover what's the reason, how it will affect the Japanese economy, and how it will affect the rest of the world. Japan was stuck in time. It's been 30 years. Japan was going through a period of massive deflation. What actually deflation is? Deflation happens when people are hoarding cash. People are not spending much, which actually slows down the economy. So we will go through the history and understand what the Japanese economy had gone through the period and what its actual condition right now. So after World War II, Japan became one of the biggest economy. In the period of just 20 to 30 years, from 1960s to 1980s, Japan's GDP growth was massive. They were producing much more amount of technology. They were innovating things. They actually became a powerhouse. And in the late 1980s, the Japan economy was so much booming. The stock index was way much higher. Property sector was booming also. So it caused massive kind of inflation because they used to have much more of money, disposable income there. They used to have, the demand was so much that the supply was limited, and it was causing huge numbers of inflation. So what Japanese central bank did, they raised the interest rates. And when they did, there was a massive market crash. The properties, the stock market, and the other assets fell down by a massive price. Since then, Japan upheld with each monetary policy. There was a massive kind of deflation after that inflation. And why? Because Japan was not hiking the interest rates with much amount. They did kind of in the 2008 financial crisis. But I think the central bank was not so much serious about the deflation and inflation cycles. So the wage growth was limited. Inflation was most of the time below 2% target. Major economies have 2% target of inflation every year because it makes the economy keep moving. It makes the money in circulation. And the Japanese birth rate has been declining very much, and the death rate has been increasing. So this is also a reason of deflation because the demand has been diminishing in the economy. So there's no reason to prices to go up. So, but what actually made Japan did hiking the interest rates? So actually what happened in 2022 was the Ukraine war. And as you can see, Japan is one of the biggest liquefied natural gas importer. So the energy prices was up due to the war, and it made the imports expensive for the Japan, which indirectly increased the prices in the Japanese economy, prices of the daily life goods. So there was an inflation from outside, not directly from the consumers of the economy. So it made inflation rise up, and it was a disaster because the yen was also weak and kept on becoming weak as the time passes. So how it will affect the economy? First, the mortgage payments. The mortgage payments on the houses will gonna rise up because in the past 30 years, it was flatline. It was not much higher. As hiking the interest rates will make the assets in the Japanese economy become more attractive for the investors. And they're going to invest in the Japan because hike is not much because it is 0.1%. And you can expect that the inflation is going to be not explosive thing. And the inflation is going to be below the 2% target. It will help the economy, but not with much larger amounts. The interest payments on the national debt of Japan will become high. The national debt was 260% of the GDP in 2023. And it is going to become higher in 2024 due to the increase in the interest rates. And other thing that will probably going to happen in Japan is that the bankruptcies is gonna rise up. The Japanese companies which are already highly indebted will have to pay more interest costs on their debt. So it may lead to a large amount of bankruptcies, and also there's a significant rise in bankruptcies in the past months. And other question is that how Japan's hike in interest rates gonna affect rest of the world. Japanese investors actually hold $1.1 trillion of the US bonds. So there's a risk that these investors are going to pull out the money and invest it somewhere else, maybe in the homeland, due to the attractive assets there. And it is going to be a shock to the global economy because it is a very big amount. The yield curves are going to be disrupted. So and there's a risk. And there's also risk because Japanese investors hold a very big chunk of money in the rest of the world also. So if they gotta pull out the money, this is gonna be a disruptive thing for the rest of the world.